Hello, everyone. Welcome, welcome, welcome to Medical Money Making Moves with Tiffany Johnson. Today, we are here with the most fabulous woman. Her name is Erica Jones, and today I want to just welcome her to my YouTube channel. I would like for Erica to really introduce herself in just a little bit, but just to give everybody kind of some background about this YouTube channel. My name is Tiffany Johnson. By trade or career, I am a physician assistant, and I've been practicing for about 18 years now. But I am transitioning into the real estate investing world, and being in this real estate like world on this journey, I have met some amazing people, and I want to be able to bring the things that I've learned about real estate to other healthcare professionals who may be interested in this field but really don't know where to start or just want to be educated more. My goal is to educate other healthcare professionals as well as other people who may not have access or know that real estate investing is something you can do. Actually, a lot of times when we're talking about real estate, people immediately think about like an agent, like right, like a realtor. Totally different from that. Like, we're on the investing side where we are looking for assets to either keep, buy, and hold, or there's so many things you can do. I won't even start to name them. But anyway, my goal is to educate folks as much as possible, and I'm so glad to have Erica here, who
Yeah,
a mortgage and insurance broker. But again, I'm going to let her just kind of introduce herself because I want to know a lot about her journey and kind of what's been going on. We recently just interviewed her husband, Dana Jones, and I told him, I was like, Dana, I've talked to your wife before. I need her on my show because
right.
she just seems like, I love her energy, and I just want to know what her story is. So, without further ado, Erica, please, introduce yourself, tell us what you want us to know about you, and we're just going to talk from here on out, okay?
Okay, perfect, perfect. So I am Erica Jones, located here in Los Angeles. I'm in Sherman Oaks, and I'm a real estate broker, a mortgage lender, and also an insurance broker. So I have quite a vast knowledge of real estate. As Tiffany mentioned, my husband is a real estate investor and developer, so I have no other choice but to be engulfed in real estate at all times, right? There's always something to discuss. And Tiffany asked that I come on and just share some further intel and kind of connect the dots, to help engage healthcare professionals because there's a huge need for sure. Like I mentioned to Tiffany personally, my sister is a nurse, and I have a lot of clients that are in a medical healthcare profession, and they have no idea, knowing that it's a very, very rewarding career, right? Being a medical professional is very rewarding, and it's something that takes a huge heart. So I commend you for your beautiful heart, Tiffany, because
Yeah, thank you.
it's a lot of work, and your care and sincerity is like we need that every day, right? But it's kind of like a give back time, right? Because real estate investing will forge the opportunity for you to retire.
Right.
You know what I mean? It's going to forge the opportunity for you to be who you want to be.
Yeah.
A lot of healthcare professionals, they work in the hospitals. They're mandated by someone else's schedule, very demanding schedules and such. And they don't really have a lot of family time or a lot of time to relax and enjoy life because they're not able to get to the point where they're a consultant or let go because they have to keep the grind going every day with going to work and submitting to those hours and those schedules. Whereas if they had a real estate portfolio, that was bringing in upwards of $20,000-$30,000 a month, then
Right.
they could be like, you know what, I'm going to take some time off, I'm going to go on hiatus, I'm going to go to part-time, and I'm
Yes.
going to start my own practice, and could really, really then hone on what their deepest passion is,
Absolutely.
and and segment over into being their own boss.
Yeah.
So
Yeah.
that's why I'm here today, to make sure that we have the insight and knowledge, so that we can help to transfer or help transcend some of that energy and power,
Right.
which is where it needs to be, making you an investor.
Absolutely. I love that. And like you kind of really described me. Like, don't get me wrong, I love medicine. I love being a PA. I love taking care of patients. Like I've done quite a few things within medicine in different specialties.
Yeah,
But it's just like, okay, now like I'm at the point where I'm actively working to like make that money. If I'm not working, I'm not making money. Right. And
right.
so
Hmm.
I don't want that to be the case. And I knew early on, I was like, okay, God did not create it has to be more in life than just working to like pay bills. Yes, I'm serving a purpose, but I still have to work in order to pay the bills. We have to work to make sure our kids are taken care of. We have to do da 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 da. And I'm just like, that's not what it's all about.
It's not. It's not.
No,
And you know what's so funny? That was the sermon yesterday at church. God didn't bring me this far just to bring me this far.
correct.
Like a PA, that is a huge accomplishment. A
Oh,
huge accomplishment. I know your parents are so proud. Like, oh my gosh, that's like a beautiful, beautiful sentiment to
oh,
your parents and an accomplishment to them as well as you. And for sure, I know, like I said, it's just like we're caught. Most folks that are professionals that you either are going to be a doctor or an attorney, and these are huge accomplishments. Yet you can't really make your own schedule if you're working for a huge corporation, an entity as a hospital. So kind of got to decide who you want to be
right.
and be able to find a way to transcend that into your own practice,
Yeah.
of sorts, and or um hire other hire others to basically duplicate you and your beliefs. You
Yeah,
know what
absolutely.
I
Yeah,
mean? Hmm.
absolutely. And like for me, it's just a matter of, all right, well, I would be a PA for 18 years this November, right?
Wow.
So I've been in it for a really long
Girl,
time.
you look 18.
You know, that's why you're my favorite guest so far, okay? I love it.
18, you only 28. The
I love
math is not mathing.
But I'm telling you, I've been here for a long time. And I'm just like, there are other things I love to do. There's other ways that I want to make an impact. Like,
Yeah.
I'm just a huge believer of serving. Like, right now, my husband and I, we do a few things ourselves together where we go to like HBCUs and we teach other minorities about just the medical profession. We want to show them, like, hey, you have people that look like you that are here, and we need you to come into this field. Right. And so,
Yeah.
one of my other I just feel like as I transition into the real estate world, I get to a point to where I can truly make an impact based off all the assets that I am obtaining, right? And my goal is to pull others with, bring them along. Well, let me educate you so you can come along if that's what you choose to do.
Yeah.
Right?
Let's
And
buy some
so,
hotels.
let's go. I'm ready.
Let's
Like,
buy some hotels. Exactly.
I love it.
Meet me in a break room. Let's have a real conversation, right?
Yes, absolutely. I love it. So speaking of that, tell me like with, you guys invest in like what from a I guess a mortgage broker, tell me exactly what does that entail? So to someone who may not even know what a mortgage broker is, tell me what does that entail? Yeah.
Okay, yeah. So a mortgage broker in particular is a lender. It is a third party that works on your behalf to find you a deal, find you the best niche products that are not offered in a retail setting. So you can't go most likely to a JP Morgan Chase or a City National to find these products. They're off-market products that are offered in like the secondary market where they're non-qualifying loans. So you may not need to qualify with, a pay stub or even a bank statement. There are like DSCR loans are, that were qualified based off the asset in order to get you into a mortgage product. So we find and help you to solidify the deal, close the
Okay.
deal with creative finance most of the time that are
Okay.
not offered through retail. So
Yeah.
I'm a direct lender and also a mortgage broker. So I actually have access to both, where I can, either one way or the other fund this directly through my wholesale line here at ePlanet Mortgage, or I can broker the deal through another channel to find you the best pricing and a tailored product to get you into the to the asset, or let you know what you need to do to make it there.
Yeah, which is really awesome. Like I had never until again getting into this space, I'd never even heard of like a DSCR loan.
Hmm.
And basically that's like a debt service. What does the acronym stand
Debt
for?
service covered ratio. Yep. Hmm. Yep.
And with that, one of the biggest things for me, because there are a lot of people out here that cannot qualify for a conventional loan where you go,
Yeah.
let's say one of the bigger banks, so Wells Fargo, Bank of America, whatever, you can't qualify maybe because you're self-employed or you're
Hmm.
an independent contractor or whatever. Like that's a great product to use if
It
you have
is.
property you want to get into. That
Hmm.
one of my biggest hangups when I started in this space, and I was like, I don't know if I can do this. Like, how are people affording all of these? How, do people just have like millions of dollars sitting in the side where they can afford all these properties? And
Right.
that's where my mindset was, and it was a hang up because I had to change my mindset. So when I learned about DSCR loans, I'm like, wait, so this is not like I don't have to give you all of the paperwork that tells you about my life since I was 2 years
Oh,
old,
no,
and it's
not at
totally
all.
based off the asset, like out off the property. What?
Yeah.
Crazy.
Yeah.
So
Yep.
tell me
Yep.
about that. Like, tell me just about that product because I don't know if a lot of people know about, even people within the real estate world sometimes don't really know how DSCR loans.
Even realtors, believe it or not. So there's an investment group for realtors that I've started, because I want my counterparts for sure to understand that, we are of service all the time and finding our clients, the best deal. But a lot of them are not even investing into real estate, or, they have off market opportunities that they're not even leveraging, because they don't know this product exists. So DSCR, debt service coverage ratio, basically means we just need to make sure that the asset is going to perform. For an example, if you have a property where the mortgage, principal, interest, tax, and insurance is equaling up to $4,000 a month, we just need to make certain that your rent received is going to be $4,000 a month.
Right.
So the debt service coverage ratio could go down to $3,000 a month, and it still qualifies. That's a 75% ratio. But we need to make sure that it does cover. And there are even no ratio DSCR loans, which basically means like, I really love this property. I know it's going to cash flow at some time. It's not cash flowing currently. So I'm willing to take a higher rate because it's more risk to the
Gotcha.
investor, understand,
Mhm.
for 1 year or 3 years or whatever the prepayment penalty you select, just to get into this asset.
Yeah.
And then you can basically value add to bring it up to par, which means you're basically going to improve the property, and or you'll be able to refinance with a lower rate,
Right.
sometime soon, or change the insurance or something so that it does debt service. So the ideal situation would be where your mortgage actually covers the rent. A worst case scenario, you want that to be at 75%. For an example, the mortgage being 4,000 and the rent collected being 3,000, that's going to be at a higher rate. Or debt no ratio debt service. So basically the idea is, the more it's a 1-to-1,
Mhm.
the better rate you're going to get.
Okay.
The lower the debt service coverage ratio or no debt service coverage ratio, the higher the rate, but it's still not impossible. A
Right.
lot of folks sometimes also are considering, doing like Airbnb or short-term rentals. So how that works is the appraiser would actually go out to the property if there's no tenant in the property right now, but it's going to be tenant occupied, and they're going to measure the amount of rent based on the area, right?
Okay.
So they just need to make sure that when they pull up the information from the multiple list system and all their other databases that confirm like what the values are in the area as far as the rent schedule, it's called a 1007 rent schedule,
Okay.
that it's going to match what you're showing. So
Right.
let's just say you have a person that just really needed a space and they're paying you $5,000 a month,
Mhm.
right? But the area rent comps are only coming back at 4,000, then they're most likely going to use like a 1% or 115% of that. But you still would qualify. You know
Use
what I
the
mean? But
outside.
they're not going to give you the whole $5,000 because it's a very unusual situation. So the blanket statement is an ideal scenario would be if the rent covers the mortgage, you're good to go. You can go down as low as 75%. But if you go down to no service coverage where it doesn't make sense, like maybe you're only collecting $2,000 a month, but the mortgage is 4,000, we can still get the deal done and then just give you time to reconcile and to bring that up to, to the regular rents.
That's amazing, and I feel like it's
Mhm.
such a game changer,
Yeah,
because you don't have to, again, go through the conventional ways of doing things, right?
yeah,
There's still, like, the money down the down payment and stuff you have to do, like, it
yeah.
what, 20-25% usually?
Yep.
Yep,
Yep.
which, I
And we
mean,
even had down to 15%. So there's a program, yeah, that's even down to 15%. Again, the
mhm,
lower the down payment,
the higher the
the higher the interest rate. But it's when you think about investing, I guess one of the things that I see most often that's a little deterring for me or overwhelming for me is folks are like, okay, well, what's the rate? And I'm like, does it really matter? Like
You're right.
nothing's permanent but death. Like right now, without this asset, you're operating at a negative every
Right,
month because whether you buy it or not, the value of that property is going up every month all over the country, right?
absolutely.
So if it's 3%, 8%, 12% interest, what does it really matter, right? Because that's only for a temporary time. It's maybe until the rates get better 12 months from now or 18 months from now.
Right.
But you want to make sure that you're not, most importantly, even if you pay a higher rate, that you are getting into the property with lesser of a prepayment penalty so that when the rates do fluctuate and they go down, you have the opportunity to refinance. You know what I
Yeah.
mean?
Yeah, that makes
So
sense.
that's the most important part, but not getting into the asset is where you're actually losing.
Right, because you don't have anything, right? And
You're
again,
losing hundreds of thousands of dollars a year. You're telling me about a difference of $73 a month one way or the other. And I'm like, okay, well, if you don't buy, you're gonna lose $50,000. So
right.
what are
Like,
we
you
talking
don't
about?
have anything. It's a
Yeah,
mind, but it's totally a mindset because I know you and I had a similar conversation. I was like, "Wait, she is so right." Like, if I don't take action and if I don't take
right,
I have nothing. So, like, you really gotta put into perspective, like, "Okay, what am I trying to do here?" Yes,
right.
I need it as an asset, and there's just so many benefits for having a property, right? For having
Yes.
real estate,
Taxes on your taxes,
all the
for your
things.
portfolio, you
Correct.
cannot outsave the market.
Right. Very,
Period.
very true.
Period. It used to be only in certain places, being in Los Angeles is very, expensive here. The
Mhm.
land value is here. Folks purchase, multi-million dollar properties just to knock them down. Even though it's historically a blue state, right? And we have all these laws that are protecting the tenants,
Yeah.
people still invest in Los Angeles because the equity gain here is like hands down like one of the most expensive in the country outside of New York and Hawaii, right? So
Yeah.
if you purchase a investment property here, you're likely to see, even in the very worst market,
Mhm.
50 to $100,000 a year in equity gain. You can't save that much money. You
You
can't
can.
save that much money. And that's why people purchase, folks are interested in purchasing property in Los Angeles, even though there is no debt service coverage, right? Your mortgage is going to be 7,000 and you can only make $5,000 a month in rent and pray to God there's no other moratorium or anything, right? But they're willing to take that chance, right? They're like, my money's just sitting in the bank account otherwise, and I get, I am trying to get to the point where I'm getting 50, $100,000
Yeah.
interest or equity, on
Yeah.
my money every year. So I'm willing to take that chance. And so
I
it's
love
like,
it.
all right, I'll pay the $24,000 in negative
Right.
cash flow every year if I'm gonna make $80,000.
Later on. I mean, yeah, again, you just have to look at the future, like where you're going. And
Yep.
so I totally love that. What other products would you say from the mortgage side are pretty popular products with you and your
Yeah, definitely, definitely. So some of our other W-2 employees, other professionals, they also have like an LLC. So if
okay,
you've already become an investor and you already have rent outside of debt service, if you purchase, you can always do bank statement. So they would look at your receipts
mhm,
of your deposits for the last 12 months, and you would be able to use that as the income,
okay,
right? In order to qualify if it doesn't debt service, or if you're looking to purchase other properties that are smaller,
Mhm.
as to where, that would make sense. Because they're not looking at the great thing is they're not looking at the deductions. They're
Right.
just looking at the deposits received.
Mhm.
So it's not like, with your, income, they're looking at everything that comes out as a deduction as your DTI.
I
They're
love it.
more so looking at, what's coming in as your
Wow.
gross receipts.
I love that. And with that particular product, do you have to use like a personal credit score or, like
Oh
your
yeah. All
personal
of all of it's based on your personal credit. So DSCR, they're going to pull your credit
okay.
and you are the guarantor of the loan. But when you close, you're going to close in the entity name or you can close in your personal name. That's another kind of like personal decision. I personally don't recommend closing DSCR in, your personal name because that's going to go onto your personal credit. And also it's going to close and the note and the deed are going to be in your personal name. So if you ever have a dispute or anything with a tenant,
Right.
they can look you up easily and be like, oh, she owned 12 other properties. I'm after Tiffany. I'm
We
after
are
her.
not about that life, okay?
Exactly, exactly. Whereas if it's in a corporation or entity, then you have some protections there against, any liability and lawsuits and things like that. So I
Mhm.
personally would, even though it's a little bit of a higher interest rate, I personally would rather that extra barrier of protection, with getting your properties into an LLC, having a trust holding company that's going to cover you to make sure that you're protected, because it's unfortunately the more we have, the more problems we have. And so as you begin to scale, your investment portfolio, you definitely want to make sure you have those levels and layers of protection because folks will come after you.
That is very true. But 100% though, you
They
got to
get mad. They're like, oh, I'm just working this W-2 job, or oh, I'm on government assistance and Miss Tiffany, she owns 32 properties because they'll be all up in your business and telling you about
we're not going
telling
to
you about yourself like you're a bad person because you did
do
the right thing. And so it's just like you want that protection, like I said, and as long as it's cash flowing and you're seeing the equity gain, I
yeah,
definitely think it's a better option to, have it in
in
your
your
entity name for sure.
I 100% agree. And that's, we have that with the holding company as well as with a
Yep.
subsidiary LLC. And again, within a registered agent for the anonymity of it, right? It's
Yes.
because of what we do, like we could totally be targets and we just don't want to do that. So
Right.
guys, if you're going to be purchasing property, please have an LLC, have something as a protection for you.
Right. 1000%.
Registered agent. So
Right. Exactly. Right. We trying to tell you.
I just want to make sure you guys are protected. So that's the main thing. Now,
Right.
I hear some good news. Like you just got was it insurance like certification and stuff?
Yeah. Yeah. Yeah.
Hey, congratulations. Look at you. So tell me
Yeah.
what that means and what does that, how does that broaden your scope?
So before I had been licensed in insurance, and it's not like my passion. Like insurance is not my passion. Real estate has always been my passion. I'm a very extroverted person,
No.
right? So I'm very outgoing. I'm not like really typically the office type. Didn't really
Yeah.
become like the underwriter broker type until I got married because my husband is, you think I'm an extrovert. He is like to
Oh,
the extreme. I call him like he is the master networker. You can let this guy go anywhere and like anywhere. Like we literally just came back from Cabo for our anniversary. He
aw.
was all on the boat, like all on the boat with the owner and the back with the chefs.
Oh my
Like that he is, he will go anywhere. I'm afraid to let him lease in the White House. Cause like he'd be up there with the president.
Please, Shadow. Let me tell you. So Dana and I had talked before, but I actually got to see him in person when we went to Puerto Rico for the
Yeah,
summit. And like I think I saw him day one. After that,
right.
I don't think I
You
saw him
see him
until the third
anymore.
day. And the
Somebody
people
told me
were
he
like,
got kidnapped.
right, the
Where did
people
he
were like,
go? Right.
is he good? And I was like, oh my God, let me text him. Like, Dana, you good? Like, you didn't get kidnapped, did you? He's like, oh no,
It
I'm
was
just
him. It
networking.
was you.
Like, brother, people were so worried about you. So I
Yeah,
decided to text you, but he was good. He was like, I'm just networking. That's all. I was like, do you think?
always.
Your
He is
thing.
never in one spot. So
I
I
love
have
it.
to be the introvert of the extrovert pair, right, of the couple.
I love.
So yeah, so now I'm inside and just being in underwriting, being the broker, being responsible for all the compliance things, and just like our day-to-day business, we notice that people are either over covered, which
Mhm.
hurts my heart because
Right.
it means like people are taking advantage of folks, and it's like, okay, why are you paying so much for insurance? Like that doesn't make any sense, right? You're just being overcharged like by thousands of dollars a year sometimes, depending on where the property is located, right? And or they don't have enough coverage, which leaves them liable.
Okay.
And also with processing, sometimes we don't get the best customer service. In closing our files, we can't close any loan without insurance, right? So we're waiting and chasing agents around and like, I didn't say this or I didn't say that. And they just don't have the proper staff or support in some of the smaller agencies.
Makes sense.
So if we had, it's just another level of service,
Okay.
is basically where we're coming from at a place of contribution.
Yeah.
There's no forced effort. Like we're like, okay, well, we can give you a quote or you can go with who you're already with. But the thing about it is most folks don't even realize, like, I don't even know who my insurance agent is. Like, I don't even know. So it's kind of like in-house, to be able to cover, all
That's great.
basis if necessary and faster processing to be able to get these deals closed, and to make sure that they have a competitive comparison,
Mm.
quote,
Okay.
to make sure they have the proper coverage. So yeah, it's just more
Absolutely.
more service based.
I love it. So, what about do you guys provide, say, like insurance for creative deals? So like subjectivity
Yeah,
deals or seller financing deal or hybrid deals or wraps or whatever. You guys
yeah.
do that as
So it's
well?
it's commercial insurance as well, for our
Okay.
investors. So it requires a vast knowledge. And for me being an underwriter first, like I started off as in underwriting. I did underwriting for Washington Mutual before they transitioned to JP Morgan Chase. So I understand loss mitigation and how people lose their properties and what you can anticipate will happen in regards to underwriting because I have, that standpoint working inside of the financial institutions,
Right.
and what kind of coverages are necessary, knowing that mortgage insurance only covers, the lender if you are to default.
Mm.
But hazard insurance is primarily what we're speaking of. And that's basically like slip and falls, like having rental coverage. There's actually coverage that will pay you up to 5 months if the tenant stops paying. Like folks don't even know that those types of things exist. So it's just like I said, being able to offer those coverages to our investors, without feeling like we're stepping on, somebody else's toes. But it's like, okay, did you know? Like, or I would recommend this to you. And they're like, oh my gosh, I didn't even know that I could do this. There's insurance in case it tear up your place, because
Yeah.
that's a huge, huge pitfall of a lot of our new investors. They get, they're so anxious to have a tenant in and they're not really going through the interviewing process.
Right.
Um,
Totally.
they're just looking to get somebody in as soon as possible. So it's like I said, being from all angles, real estate, mortgage, and insurance, I'm able to help them to make sure that they're completely covered, you
Wow.
know.
What a
Yeah.
powerhouse. I
Like
mean,
your property manager should be doing this, and this to protect you. You know what I
yeah.
mean? This is the type of insurance you have in place. These are the options that are available to you over and above the insurance that you require your tenants to have. This is how you protect yourself,
I love it.
especially, like I said, we have in the states that are not protecting the landlords. It's huge.
Mhm. Mm.
Mm-hmm.
And you're covered in all, you can do all 50 states?
Mm-hmm. Yep.
Okay, I'll be calling you. I have a property that's coming. I'm working on a property right now that's in North Carolina that my goal is to use it as a midterm rental for traveling medical professionals. I want to take care of
Right.
people and make sure that they're able to go to work, be in a safe place, be in a place that feels like home away from home. So
Right.
in the process of doing this, I'll be calling you, okay? Because I want to make sure we are insured the right way.
Right. Exactly. And you have all the coverages that you need
Yes.
for sure. Mm-hmm.
Absolutely. We don't play. We're like Sergeant Joe's over here, honey.
Right.
Like we like
You
this
have to
together.
be though. Nobody's gonna care about yours more than you. You know what I
Right.
mean? Like, and folks, like I said, it's unfortunate, but folks, I mean, what we've learned like on the real estate side and also on the mortgage side, is that the investors are the ones that are most scrutinized. It's like
Yeah,
you're like, oh, slumlord, this, that, and the other, and you're doing your very best to make certain that they have a beautiful place to live, and it's all wonderful, and you're investing your hard-earned money into these projects, into these assets, and people, a lot of them, they just don't care, you know what I mean? So it's just like,
yeah,
oh, it's just a rental. So, we definitely want to make sure, especially when you're in a high turnover, like, hospitality or,
absolutely.
short-term rental, folks just honestly don't take care of your stuff like
Like
you
I would.
or
Exactly.
a long-term tenant would, most
Absolutely.
likely,
Yeah.
because, this is where they're going to be long-term. A lot of times they'll just stay there and pay your whole mortgage off.
That is very true. And with the long term, they're bringing in their own stuff. So they're going to take care of their own stuff better
Right.
versus you're dealing with short term or mid term rentals. Most times those are going to be furnished properties, and so
Yeah.
that is hard to earn money that's being placed into the property to make it comfortable for who's ever coming in. So
Yep.
I am a-okay with
Right.
covered correctly so that
Yep.
we are on top of what we're doing what we need to do. Oh,
Mm-hmm.
I'm so happy that you came. I mean, clearly you are an asset for anybody to have. I mean, we have the mortgage, you have just the real estate investing experience, you have the insurance portion of, you have the underwriting portion. What can you not do? Really?
Erica Jones, all things real estate,
Let's
like
get it.
literally.
I
Like
love
literally,
it.
it's not from a place of like boasting or anything like that. It's a place of genuine concern and service, honestly, because it's like if you don't know, then you don't know, right? But once you have the experience, I almost feel like it's a responsibility that's on me. You know what I mean? Like, okay, you can see what could happen to these investors potentially, and you don't open your mouth to impart that knowledge. So it's like once I let you know these are the oppositions that you could run against, and if you choose not to cover yourself, then that's up to you.
Right.
But this is likely what can happen. And also, I wanted to, one of my things that I always say is that we don't have to always start at A,
Okay.
right? So, you're in these vast networking groups, these communities, which is huge. And so many investors don't have opportunity to these investment groups, first off, because they won't bet on themselves,
Yeah.
right?
Which is sad.
So they are like just working 9 to 5, and God knows like what happens to them when they retire, and then they're living on a fixed income, and they don't
Right.
really have any assets, and they're just like, okay, well, whatever pension I have or social security, and they provided all this beautiful service their entire lives, and they really have nothing to show for it.
Yeah.
Hopefully they at least purchase their own home, because we actually even know a lot of professionals that, because they're traveling nurses and such, they don't even ever buy anything. So it's like, okay, while you're working enough service, even if you buy something in your home state and you only stayed there for a year and you rent that out, and then you move to another state and you buy something else there, then you have property all over the country. But they're just thinking like, oh, well, I'm just renting, and I'm renting is paying somebody else's mortgage. There's no such thing as rent. It's either pay your own mortgage, pay
Or pay
somebody else's
somebody
mortgage,
else.
or
True.
even live outside. And a lot of people in Los Angeles just, I guess, they choose to live outside.
To each his
But
own.
all right. So there's no such thing as rent. I don't even know, like that's like a fake out. That's a fake out.
Right.
Like how they used to tell us rent to own, like so we would think that we're really doing something, but yeah,
And you're
it's
not. You
all
just paying them.
unfortunate. It's all, yeah.
Yeah, I
It's an
agree with you.
illusion. It's illusion. So I
Yeah,
say buy everywhere you want to lay your head at for at least 4 or 5 months. Buy something there, because you could put somebody else in there to cover you. You know what I mean? When
exactly.
you're not there anymore. And or if that's too much of an idea for you, you don't have to start at A, you could start at J. And what that means is you're in a community, right? So you don't have to start at single family homes because you only have $50,000 to invest. You could partner with somebody else. Sometimes you don't have money, but you have the credit. Sometimes your credit score is 880, 780, right? And somebody else has $400,000. So
Right.
you guys can come together on a deal, right? And you have the backing because you have the W-2 income,
Right.
but they have the down payment. So would you rather own a property 100%, that about $150,000 property, or would you rather be in a deal on a 40-unit building, you know what I
Right.
mean, in Akron, Ohio, that is cash
Yes.
flowing $50,000 a month, like which would we rather be 50% owner of what? You know what I mean? So it's our, I guess, limiting belief that we have to do everything by ourselves, or
Correct.
that no, I can't tell people what I'm doing, or it's kind of like a mindset. And unfortunately, a lot of times in our culture, we're like, okay, I don't want to partner with anybody else. I'd rather just do it myself. So we lose out on a lot of opportunities. And we notice a lot of other cultures, this is not how they live. This is not how they generate wealth.
Absolutely.
Because we're so afraid to let go of the little to gain a lot. So
It-
I mean, I stand
100.
strong on that for sure.
100%. And I would tell you that I'm guilty of that. And it wasn't that I was thinking of, oh, I'm just going to keep this to myself. It was more so I don't know how to move. Like, I don't know what I need to do to get to this other place. I hear people say, oh, your network is your net worth, right? And
Yeah.
100% made sense to me, but it did
Mhm.
not click until I started taking action in other ways. And I was like, man, I don't unfortunately have the time or the team or the systems and processes in place to where I'm constantly getting leads so that I can at
Right.
least, I can't do that. And so I had to have a talk with myself because I was getting to the point where I was so frustrated. Like I felt like I was doing this and all the things, and I didn't see any return on the work. And I was like, wait a minute, calm down, back up, Tiffany. Like, why not be more intentional about meeting the people you meet? Figure out how you can provide value to them in their business,
Right.
and then figure
Hmm.
out how they can provide value to me and my
Yeah.
business. And when I started thinking that way, it just shifted. So when I went to Puerto Rico, like I went there with a purpose and a plan to like be intentional with networking. And that's where I found another deal that I'm currently I'm actually teaming up with the guy who we're going to be doing a short-term rental for a place in South Carolina. The same week was when I decided, when I had a wholesaler come to me about a property in North Carolina, and that's the property I'm about to buy. So I'm just like, what? Now that I've made that decision that you don't have to do this by yourself,
Yeah.
even though, and it wasn't a thing where, oh, I don't want to get, I want to have all the control. It wasn't that. It was just, I didn't realize that it can be as easy as meeting people and talking to them and figuring out what do they need in their business and how can I help them to where it's
Right.
going to help me in my business too. So I think
Right.
if you come in wanting to lead with value and wanting to serve, which people in the medical field will already serving. So I feel like
Right.
at heart, like that's who we are. When you
Right.
change your mindset in that way, you can absolutely move a lot faster than what you want to
Yeah.
move.
Exactly.
So
Exactly.
you
Yeah.
just got to change your mindset and
It's
you got to
all
be
about scale.
100%. So I am so glad you said that because that was one of the things that really has changed the trajectory of my business. And I'm so
Yeah.
excited what's coming because, like, in the next couple of weeks, like I'm going to have two separate single families and I'm already a partner in LP. So, like you were saying before, one of the good things about what we can do, you can also be a passive investor. I am a passive investor as well. And I
Right.
teamed up with the team where we just closed on a 432 unit apartment complex, and I'm an LP in that,
That's what I'm
right?
saying. Yeah.
I'm going to be making money while I sleep, and I
Right.
use that for money I had in a self-directed IRA. Didn't even know that was a thing until I got in
Right.
this space.
Oh, definitely, definitely, definitely. That's huge. That's
And
huge.
yes, instead
It's
of
like
watching
you be
my
the
money,
boss of your own money, of your own asset, opposed to letting
right?
them invest, because that's what they're going to do. They're going to invest in insurance, they're going to invest it in real estate, they're going to
Correct.
invest in whatever they feel is like their idea of what's going to make them the most profitable, not
Correct.
looking out for your best interest, right? So
Right.
you're just taking, your own monies and by the reins,
I'm
and
making it work for me.
yeah,
Because
exactly.
in the stock market, which we, a lot of times we're taught, oh, invest in 401ks and that's it. No,
Yeah,
that's thing possible in my 401k. I don't know about anybody else, but my
right.
numbers were going down. And I was like, what?
Yeah, right,
No. Let me
right.
take this money, invest it in something. I can't touch it anyway until I'm
Right.
50 and a half. Why not
Investment is
take
something you can touch. You can
correct?
drive up to it, but like, oh, I
That's
own part
mine.
of that.
Yes, that's part of
Exactly.
me. So
Right.
that is a huge way to really get into real estate. I think one of the easiest ways to get into real estate is really come in as a passive investor, because we do love our jobs, right? We
Yeah.
love what we do. And there are a lot of people that this is what they work for. This was their dream from little kid till now.
Mm-hmm.
It's bringing
Yeah,
in, but you also want to find other ways to continue to get income coming in passively. You
that's
want
right.
income coming in while you're sleeping, not
Mm-hmm. Mm-hmm.
income that you always have to actively go work for.
Yep. And even another tidbit is a lot of times when you're an investor and you're just starting out and you wanting to get into these bigger deals, right? When you come to the lender, like myself, to get the money, they're like, what is your experience, right?
Yeah,
So if you only have $100,000 to start off with, or $100,000 that you're comfortable with investing, right? Then you can only get so far. You with $100,000, you're not going that far unless you go somewhere like in the Midwest where the properties are super inexpensive, or down south where the properties are super inexpensive. But like you said, if you are an LP or a KP on a deal and you're able to, you have some percentage ownership, 25% ownership, in that LLC,
right.
then when we look to you find another deal because you're in these investment communities and there's deals floating around freely all the time, right? Then
Absolutely.
you can, yeah, then you can leverage the collateral that you have to invest in another asset where you have more of an equity stake. So you can't even dream or fathom of owning a hotel, right?
Right.
But if you have an equity stake and a smaller 10 key hotel initially
Mhm.
2 years ago, then you can use that as your experience, right? Because your name is on the deal. But you can't initially that, so that's how they do it. Your name's
Exactly.
on the deal. So that's what the lender is going to ask you for. What is your experience? What is your experience in hospitality, right? So, or what is your experience in multifamily? But if you don't have experience because you're like, oh, I have this $100,000 and I want to own everyone by myself, then you're not going to get to how long is it going to take you to get the experience to be in the deal for even a 10 key hotel?
Absolutely.
It's
You
going to
just
take you forever. It's going to take you a lifetime, if ever you even get to that point. So that's where my motto, we don't have to start at A, we can start at J. That's where that comes from. Definitely, if you partner, if you're in a networking group. And what's funny enough is so many people are folks that don't even get to that point. Like they won't even pay the $8,000 to the cost to even get in the group. They're
I
so
know.
scared. But
I
I bet you they
know.
buy the I bet you they buy the Chanel bag. I bet you buy them Louis Vuittons. I bet you they be pulling up in a Mercedes Benz. But you
Right.
know what? When it comes to like, okay, let me invest, let me take a shortcut, and then on top of everything, got $800,000 worth of student loans, but you won't pay $8,000 as a fast track.
Yeah.
I'm gonna give you all this information that's guaranteed and put you in this community where you
Right.
can make $100,000 this year, which is half of your income sometimes if you're a
Absolutely.
nurse, right? That's half of your income for the year. You
Mhm.
can, I can guarantee you can make, if you're in this investment group and you really dial in and focus on and hone in, you can make $100,000 this year, but you're like, I don't know.
I
Because it's like
can't, but
they're,
I don't want to part with $8,000 is way too much. And I'm like, change your mindset, because
yes,
the first
exactly.
investment should be an investment in
In
you.
your mind. That's the first,
In,
and that's the
in
first
your
piece of real estate you should invest in between your
absolutely.
two ears.
100%. Find those communities like that
Yeah.
will be able to feed you that way. Like the community that we're part of, sub two with Pace Morby, one of the most amazing communities ever. And
It
you're not
is.
the naysayer there, but there's so many people in there that are of like mind, that are go-given, that have so much experience from different aspects in real estate. I've been in other mentorships before, not necessarily real estate, but just a
Yeah.
mentorship. I've never been in one like this where you have
Experience anything like this. Right.
so I'm just
It's
like,
the
get
reason for today. Like you and I connected. You know what I mean? Because of the
right.
group.
Absolutely. Absolutely.
That's
So
proof of concept right there. Like, look,
it works. It really do work.
we're here, we connected, and we're sharing with the world
Right.
now. You know what I mean?
I
Because
love it. I love it.
that in itself is worth how much?
Yeah, priceless.
From a place of contribution, of genuine service and giving. Like if somebody said, okay, well, you pay, and I don't even know how much it costs. I didn't pay for it, Danny paid for, but I'm like, I'm like, but if just for the fact that if if you invest in this group, then I will give you the opportunity and the platform to be able to speak and connect with people that are in our designated areas of expertise, right? Our professions, our careers give us a platform and a stage to be able to give back and help other people. But you got to pay $8,000. That in itself, without anything else,
Yeah.
is worth the money. And it's people like, I'm gonna get back to you. And I'm like,
okay.
You don't have to. You don't have. I'm look. Hey, I'm at this point in my life. I'm not trying to convince anybody about real estate. I'm living proof that real estate is the answer.
Right.
Jesus, love, real estate. That's
Real
it.
estate in that order.
That order, right?
I love it. Thank you. Thank you so much. I really appreciate you coming on this show. Well, before we end, like, how can people find you? Tell me the name of your company and where they can find you guys or connect with you more.
Definitely. We are ePlanet Mortgage. We're in Sherman Oaks in Los Angeles, right across from the Cheesecake Factory. So we're local right here on Ventura Boulevard. And then you can check all my handles on Instagram, on Facebook, on Pinterest. We're eplanetmortgage.com. It's ericajones.realestate also. So reach out. Also, we'll tag my phone number in here, put that in a DM. If you have any questions, feel free to reach out. I'm an open book. I love to share, and let's get started. You're the only one holding you back.
Yes, because you have people here wanting to help you. She has dropped some fires for you guys, some golden nuggets. So I truly hope that y'all reach out to her. Of course, you can reach out to me as well. So Tiffany S. Johnson on IG as well as Facebook is too. So absolutely. Thank you so much, Erica.
Of course.
It was a pleasure having you on my show. So
anytime.
Yay, awesome. Well, guys,
have a blessed day.
Have a great day, everybody. Reach out to us and we'll talk to you guys soon.
All right, see you soon.